So everyone's talking about building wealth in Australia right now. Brian, when clients ask about building wealth, how do they even sort of start that?
No, it's a great question. I think what Australians need to know is the dollars in your back pocket aren't worth the same as it was 30 years ago. So $1 million in today's term was around $400,000 in 1995. Just shows the value of the dollar eroding year by year. It's said that $1 million, even in the next 30 years, you're gonna need $2.5 million to even have that same purchasing power. And there's three areas that we, focus on to beat that inflation number. Cash flow, tax minimization, and investment strategies are the areas that we look at to kind of beat that inflation metric.
Okay, so how does super sort of play a role in that? Does that play a big part there in beating inflation?
Super is one of the, in Australia, it's the second biggest asset from an individual's perspective. Great tax efficiency and great compounding, right? So it hits two birds with one stone. There's a lot of people focusing on their cash flow, trying to figure out $10, $15, $20 here and there as a surplus. However, they could be looking at managed funds, exchange traded funds, tax effective strategies where they're putting it into their superannuation and compounding. These are all strategies that people have been using over that time to, counteract these high inflation numbers.
Okay, and I guess how is debt in all of this apart with, building wealth in Australia? Is debt always bad? Is there some good debt? How does that sort of compare?
Yeah, it's got its purpose, right? If you want some liquidity, some short-term returns, that's an idea, right? However, at the end of the day, when you look at, the interest rate's 4.5%, when you look at inflation, 2.5%, you're getting a rate of return of around maybe 2%. Most Aussie households don't have significant liquidity where that 2% is really going that extra mile. When it comes to good loans, for example, look at property. Look at geared investment options over the last 10, 15, 20 years. If you were putting it in a savings account compared to some of these assets or investment options that we have access to, you would have been left in the dust a long time ago.
That makes great sense.